feels like Google is so close to figuring this out. I mean, I've been doing some barred searches.
Jake, how much Google do you own? How much Google do you own?
Not enough.
Yeah.
I just been playing with the on my jtrading.com.
He's thinking of adding a
He's thinking of adding
I'm thinking of adding $10,000, like a buy-in or two. But let's pivot over to this Reddit thing because it's super important that people understand this.
7 shares.
I'm going to buy 17 more shares. I'm going to buy like a Harlan 2014 equivalent in shares. No, my J trading is up right now. JTrading.com. Shout out to my trades. I did it for fun. I'm at like 20% returns versus 6%.
Well, Jake, you went kind of quiet for a while. So when you're down, you don't talk about it. And
no,
then
I had
the thing
built,
comes
I
up
bought
and
all
you
the
talk
stocks
about
I
it.
liked, and I didn't want to change them.
Do you track them and exit, or what do you do with
I'm going to
management?
track the exits, but I haven't exited any. If you go to jtrading.com, you can play along. But,
Jake, how can you only be up 20% when Facebook has doubled?
Oh, sorry, 22.43.
Yeah, but Facebook doubled off the bottom. The whole goal of trading, Jake, is to maximize your highest conviction. Maximize your highest conviction. What'd you do? Put a nickel? Did you put 5% into Facebook?
I don't know. I just bought companies as they went
but
by in the group chat. When you talked about it on group chat, I made the trade.
You got to put a lot of chips on the table. I mean, you have pocket aces.
I think, what's the optimal number? As a day trader, Brad, what's the optimal number of names I should have?
You're not a day trader. You don't trade.
As a long trader, what's the optimal number of names I should be in?
You have too many. I think with your level of insight, on the things that you really believe in, there was such asymmetry in that position at the time that you bought it. Yeah. It was your best idea. You should have put at least 30% of whatever you were going to allocate to this into that position.
That's what I'll do. Yeah. I mean, it's done okay. I mean, listen, I'm up. What did I buy? I bought 500 shares and my basis is 47 and I'm at 140. So it was a good trade. Yeah.
Now imagine if you could, 10 or 20x that.
Yeah, that's what I should have done. Yeah. All right.
Jason, anyway. Wait, hold on. How much have you put into all those stocks?
1.5 million.
I basically I had some money in an index fund laying around and I was like, let me do this.
1.5 million.
I did J trading as a blatant attempt to get a sponsor for This Week in Startups. So I was like, maybe Robinhood or E-Trade will sponsor this and I'll make it like a segment.
Oh my God, so good.
So I was like, let me do like a segment where I trade and see if I can secure the bag. And it, the markets are so crushed that nobody is spending advertising from Robinhood or E-Trade or Interactive Brokers or Bloomberg. But I also did it because I wanted to become better at public market trading. To your point, to last week's conversation, Chamath, is understanding when to sell and when to go long when you get distributions as a VC. That was really the reason I tried to do it, was just to try to have skin in the game. Just like learning to play PLO or you playing the RAS tournament. I just wanted to.
It's very easy. Once you get shares distributed to you, immediately sell them, and then hold on, and then re-underwrite from scratch from there.
Okay.
Once the money is sitting in your account, even if it takes a day, a week, a month, it's not like the stock's going to rip and triple on you over the next 30 days. Re-underwrite it from scratch, and then see if you have that much conviction when you see the money in your bank account.
I like it.
I would just tell you guys, the distributions, there were a lot of firms that rode, a lot of these big names, right, all the way down. They got public, but they didn't distribute much, if any. And it's really
don't say the names, but what do they rhyme with? I'll start.
But what's
Makoya? Go ahead. You go next. You pick one.
Not doing it.
Bliger.
Mandreessen. Borowitz.
Mlaundersland.
Look at Freeberg just dropped off. He's like, I don't want to be associated with this conversation. All right, listen, we all got our asses kicked. Except for me. Uber's up 67% this year.
Oh, come on. Let me... What I was going to...
Mandreessen Blorowitz. It just rhymes.
What tends to happen is things hit the bottom, they bounce a little bit, and people are so relieved that they bounced a little bit that they immediately start distributing because LPs are hammering them. LPs are like, why did you not send us this, Snowflake when it was at $400 a share? Why did you not send us this DoorDash? Why did you, go through any name, that you can think of? But then people compound the mistake, I think, that as soon as they get a little relief, boom, it's out the door. And then the thing doubles on them. And I just think, part of the benefit of me having to get up every day, 5 a.m., deal with public markets and think about long or short. It's what we were talking about in the fall of 2021 around the table before the poker games, which is the public market is tilty. It doesn't feel good. And that, we stopped making venture investments in October of 21, principally because of how we felt about public markets at that point in time. And so I think a discipline. In fact, I was meeting with a managing partner of a very big venture firm in Silicon Valley this week. They just started about a year ago or 6 months ago doing public market investing. And they said it was incredibly valuable to how they think about distributions and what they're doing in the venture business.
That's what it's been for me. I have now started to learn how these things are priced. And I just think it's great as a learning thing for me. I have to make two decisions. One, to distribute to my LPs, which I just give them the shares the second I have them and let them make the decision. But then it's also personally for me. Do I want to hold it or do I not? I like your suggestions. Nice punch up, Chamath, of looking at the cash and then deciding if you want to reallocate.
Did you guys see this crazy thing from Calpers where they were like, they were down like horrible returns on the venture side. And so their decision was to double down.
Well, they took like a decade off from venture.
The returns of what they did invest in venture were atrocious.
To be fair, I don't know how the board has changed at Calpers, but Calpers brought in a new CIO, an entire new team. And so they can't be held liable for, that track record. I did kind of see something on Twitter about it. I was shocked. It would be very difficult to manufacture that bad a track record if what I saw was accurate. However, I would say the team that is there now, the portfolio that they're putting together and doubling down where I think venture is kind of at the bottom or bottom third. And
this is the bottom, yeah.
I think bottom third, I don't know, bottom half. Listen, in venture, you got to find three things. You got to find, you don't want to invest all your money at the top. So you got to get the bottom third. None of us can call the bottom. But, last year at the end of 22, we were certainly in the bottom third evaluations. Then you want to be early in a major platform disruption. I think we all agree we're early in a major platform disruption. It's probably the third of our careers. And then you want to back one of the best firms, best brands in Silicon Valley. Like if you do, and people know who those are. If you do those three things, simultaneously, like you got a good shot at producing really incredible vintage.
Just to put some numbers on the Calpers thing so you can respond to it, Chamath. America's largest public pension, Calpers, that's California's, manages some $444 billion in capital on behalf of California's 1.5 million state, school, and public agency employees, is leaning into venture after years of bringing down its VC exposure to 1% to a 1% target. The institutional investor is now looking to increase its allocation more than sixfold, obviously 6%, from $800 million to $5 billion, the Financial Times reported. So thoughts on that, Chamath?
Well, I mean, this is the moment. There's a lot of venture firms that are hard up for money. And so they may have a shot.
They can get allocations now.
In order to get into these funds, the problem that they have to realize is they may be buying a bunch of toxic assets or a bunch of toxic partners in the sense that a lot of these people have been getting run over for the last 3 or 4 years. We don't know. Again, we've said before, most venture investors are probably unprepared for this shock because they've never lived through one. There's been a lot of junior muckety mucks that were hired because they were XYZ middle level exec at rando company. Means nothing. So I don't know. I think it's smart that they have. I mean,
they have to be thoughtful in picking managers.
First of all, how is it that literally it's like
I know. It's incredible.
Trillions of dollars being made in your backyard, and some genius was like, well, the thing that's creating all the wealth in the world, which is in our backyard, where we probably have the best pitch in order to get into these funds, we're going to reject
1%.
And you just call Doug Leone and say, hey,
oh my God,
give me the list of 10 and put money on those 10 and call it a day.
Oh my God.
That's unbelievable.
That's unbelievably derelict. That's unbelievably sloppy and emotional.
I will tell you that,
let me just finish. That's the best word to use. When you look back on a decision like that, there's no numerical justification that one could have made in the 2010s to have made that decision, except that was an emotional decision. And when you're running a $500 billion fund, there is no room for emotion. You should not be allowed. There should be some. So I think that shows a very hollowed out and at a minimum imbecilic risk management infrastructure at Calpers that needs to get fixed. So whether the allocation goes up or down, if I was a teacher and my money was being managed by them, I'd say, man, these people, I would want to understand how they're making decisions